Hello, everybody. KT here from Atosha Global Analytics. Janet Yellen is up on Capitol Hill yelling at senators today about what they've done in the economy. That and more coming your way. Atosha Global Analytics. Please like and subscribe. As usual, the first thing we cover today is the questionable truth of the day. We don't cover lies, just questionable truths. So the questionable truth of the day is GDP, gross domestic product. Gross domestic product, or GDP, is the measure of economic output that the U.S. has used since really the Great Depression. Even if GDP could be estimated accurately, completely accurately, it is an incomplete truth. First, the definition of GDP. GDP is C plus I plus G plus the difference between E and I. C is private consumption, P is private investment, G is government expenditures, E minus I is exports minus imports, or net. So again, if it could be estimated accurately, it is missing something. It is missing something that is required to reflect accurately what growth is. And that is how much have costs gone up, or how much has the currency devalued. If you factor that in, then it can actually reflect what the real growth or lack of growth is for the economy. CPI, it is not the only measure of inflation. The Fed actually prefers to use other measures, core CPI, some other things, PCE. For this purpose, we'll just use CPI so that you can see what the total cost of goods is in the consumer price index, which is CPI. So GDP factored or reduced for the price of inflation looks like this. First, let's look at a few years worth of GDP. Here's what the consumer price index is. Here's what gross domestic product is. Please notice that 2020 reflected some massive swings due to COVID. So let's look at it quarterly so that we smooth things out a little bit. And then let's look at annual. So this is real GDP when it's been factored for inflation. Also, when you look at things quarterly, you can see the massive swings in 2020, but you can see that growth was consistently held back by inflation in 2022, and that overall we had a very slow growth year. Despite what may be happening with employment, the economy overall is actually shrinking. So just this morning, Senator Johnson asked Janet Yellen when she was testifying before the Senate, what is the value of a dollar today versus what it was on January 20th, 2021, when Joe Biden was sworn into office? And the answer is 87 cents. A dollar has shrunk by 13% in that time period. So though we've had economic growth, we've also had obviously devaluation of our currency. We have less purchasing power, so we've effectively lost ground. So look, you don't have to have an economics degree to navigate things today, but you do have to have a real sense of when you're being lied to, or when you're being misled, or when things are inaccuracy. And please understand that GDP, though it's a worthwhile measure, it's something to use as a benchmark when factored for inflation, especially since inflation has increased so much in the last few years. Real GDP is actually something you need to focus on. Don't just believe headline statistics, but be informed and know that you need to consider everything that is going on in the economy. Please understand that you have to understand not only what is going on in the economy when they publish things, but also what might really be going on behind the scenes that they aren't including in those headlines. So today has been a tale of volatility. The stock market, the commodity markets, everything is up and down. Bank stocks are continuing to be hurt. Credit Suisse, some people pronounce it Credit Suisse, some people Credit Suisse. It has been rocked today at various times. Certainly there's a lot of concern over that particular bank. the equivalent of our Federal Reserve. They have stepped in and they have promised to backstop the bank, so it does not look like it'll fail. We've had a total of 3 bank failures in a week here in the U.S. And I found an article today that I really highlighted a couple things that need to be shared because it is really, really important. By the way, for those of you who are concerned, First Republic, a noteworthy bank here in the U.S., it is still on the precipice. And so it is being watched closely to see if it's the next bank to potentially fail. I wanted to bring up that yesterday I shared extensively the fact that everything was fine. That was the narrative of the day. And of course, something didn't smell right. So of course, overnight we had a news story come out about something the Federal Reserve did. Because everything is fine, this is what they did. Let me go ahead and read some from this article. It was actually published in Bloomberg, and it was Masaka Kondo and Alexandra Harris were the authors of this particular article, and I think you'll find this interesting. It says here, market observers are on alert to find out just how much extra funding the Federal Reserve's new backstop program will ultimately add into the system. With analysts at J.P. Morgan Chase and Company positing that it could inject anywhere up to $2 trillion in liquidity. That's $2 trillion with a T as in Tom. So everything's fine. Let's inject $2 trillion worth of liquidity into the market, potentially, if it's needed. If you look back in history, they only provided about $3.8 trillion during the entirety of the Great Recession. So everything's fine. But just in case, here you go. Reading a little bit further into the article, you get some interesting information, and you can extrapolate some interesting things. So here you go. The usage of the Fed's bank term funding program is likely to be big. There's a strategist here. I'm not going to attempt his name, but it's a gentleman from London. And what he says here is that the largest banks are unlikely to tap the program. The maximum uses envisioned for the facility is close to $2 trillion, which is par amount of bonds held by U.S. banks outside the 5 biggest. I'm actually jumping to 2 paragraphs down so I can tie this in so you can see what I mean. Well, there's still $3 trillion of reserves in the U.S. banking system. A significant portion of that is held by the largest banks. So the largest banks, of course, there's actually like a big 8 for banks in the U.S., whereas they happen to mention the 5 largest. So if you take $3 trillion and you say, they don't give a number here, but they say a significant portion. So what is a significant portion? More than 50%, less than 95%, so somewhere in between. Let's say, to keep it round, let's say it's 2/3 of that, or $2 trillion. So there's $1 trillion of reserves in the U.S. banking system outside the big banks. And they are adding $2 trillion to it. Just a little interesting math right there. And lastly, it says here, Treasury 2-year yields have tumbled more than 60 basis points this week. That's as of last night when this was written. 60 basis points is, of course, 0.6%. And, of course, 2-year treasuries were running in the 4% range. So you can see it dropped significantly. Again, as I noted, and as you well know, that is likely tied to the fact that they anticipate a recession coming sooner rather than later. As I wrap up today, something that I want to do every day is to share with you what is going on, what are some forecasting tools that we can use to look forward. Well, one of the things that I mentioned just yesterday was the Baltic Index, and though it's been bouncing around, it's off its lows of last month, but it is still running lower than what one would expect this time of year based on previous years, normalized, of course, before COVID and in the last 2 years. However, obviously global trade is only one part of the picture as to what is going to happen in the economy. So a couple other things that I happened to check today was there's a company out there, FreightWaves. They have an index that shows what the current price is for shipping by semi. And another, of course, along with trucking, you also have railway. So, looking at indexes or costs associated with both, I can tell you that FreightWaves happened to mention, hey, the price per mile that is being asked over the last 7 days is $2.34. Now, you need some sort of frame of reference for that. That's down from right at the first of the year, it was about 280. And let me just double check. Yes, it was over 280. And if you look back in time to this time last year, which is about as far back as they happen to represent on the graph that I looked at, it is down from 260 or so this time last year. So it is running quite a bit lower than it was last year, which was when we had 2 consecutive quarters of negative GDP growth that was not defined as a recession. Just a little aside. Also, railway traffic. Going back a couple of years, I looked by the American Railroad Association. I happened to go back and look at their data, and since Q1 2021, and of course we only have 2 months data for 2023 so far, it has gone down each year. Their index dropped from 700 or so in 2021 to about 660 in Q1 2022, and it is running so far at about 630 for 2023. So things continue to go down. So just so you know, I've got some additional videos that will be coming online very soon. I want to focus some on housing coming up. We have some unemployment things that have to be covered. We also have some really insightful things happening around the globe. We can't just focus on the U.S. Yes, the U.S. is the largest economy, but we have to focus on things throughout the globe. Also, black swan events. If you aren't familiar with that term, most people are now, but if you're not familiar with that term, black swan is that event that comes out of nowhere. Nobody predicts, nobody foresees, that radically changes things. And in this last week, the failure of SVB Bank was a minor black swan. If you go back to the Great Recession era, the failure of Lehman Brothers was the black swan event that changed everything. And if you go further back in time, you would go back to, say, 9/11. The day of 9/11 was a black swan event that changed everything. And we've had black swan events happen regularly throughout our history, and it can happen anytime. Regardless, we are going to continue forward. And that's one of the reasons this channel is here, because events happen, things happen. We need to be informed, and we need to be empowered. Thank you very much for listening. Tosha Global Analytics was created to provide insight and foresight into the street-level impacts of macroeconomics, real estate and finance trends, and the policies that shape them. What is happening in the financial world today shows us that those of us on Main Street are in a street fight for our financial futures. In order to win this fight, we need to become truly streetwise.